welcome everyone to the November 23rd, 2022 live Q&A. So let's dive right into it. Yesterday, Shauna sent a message. Her client's dad passed away over the summer, and she's trying to keep her business going, but doesn't have the energy at the moment, which I completely understand. She wants to reduce her costs while she's taking a break from the business, not sure how long, and wants to know what that could look like for her and I working together. Not really sure how to handle this scenario. If I completely stop handling her books, there will be a catch up necessary when she's back on. She doesn't have a high volume of transactions, and I'd love to have her back when she's ready, so I want to be accommodating. What would you do? And, my thoughts on this was I worked with a lot of business owners that were having issues during COVID, and I was just flexible. Sometimes, and I know a lot of us in the accounting industry were pretty flexible when we were helping our clients through COVID scenarios because some were shut down, some were essential. So, some industries still needed us, but their revenues went from being certain to not being sure when the government was going to allow them to operate again. So there was some flexibility, and we just have to make sure that when they're ready, it's not going to be an issue with them. So my my response is to always try to work with the client when they're going through tough times. It's it's completely different if they're struggling because their dad died and they can't focus on the business. I- Then if they're like, "Oh, well, I just don't want to pay this." It's for me it's a lot easier to work with people when I know that they're struggling. I mean, they might end up having to close the business, and then work with them on, getting everything caught up so that they can close the business. And, always have that kind of in mind when you're helping people with books is, but I always want to work with people and help them out as best I can. And don't but at the same time, don't let them take advantage of your generosity. Work with them and check in on them every once in a while, even when they're not working with you, just to make sure that they're doing okay. Because sometimes it's kind of hard to forget, like, business is business, but there's a personal side too. And as humans, we should check in on each other. Um, it's because sometimes our business owners are going through hard times. Sometimes, and they don't want to talk about it because it's they're like, This is a professional relationship and everything," but sometimes they're just going through times that they need to know that half of the time we're doing accounting work and the other half we're acting as therapists for our clients. And it's it's okay to let people see the personal side. All right. And then Shauna wanted to revisit her client's negative gift card balance on the books. And for this one, the resolution, because the business owner did a whole lot of things before Shauna came on, and she kept doing things even after Shauna came on. And Shauna's been doing her best to get her back into bookkeeping compliance. So for this client, we determined that they did in fact claim the income when the gift cards were sold. So it increased cash and increased sales instead of increasing cash and increasing gift card liability. So When the gift cards got used, it decreased the gift card liability, resulting in a negative balance, but it also increased sales. So we discussed that the solution to fix that was to decrease sales and increase gift card liability. And then there was another side issue where the client had been uh, doing consignment for some of her customers. And when she sold the consignment, instead of paying them cash, she gave them store credit and never correctly accounted for the inventory that she sold on consignment. So again, no cost of goods sold was on the books, and the sales increased when the cash increased. So, and then the sales increased again when the customers used their store credit. So the solution to solve this would be to decrease sales and increase cost of goods sold, um, so that they're not re- receiving double income. Because originally, when they sold the consignment, it should have been an increase of cash, an increase of sales, an increase of store credit liability, and an increase in cost of goods sold. So consignment gets tricky because there's always at least four things that get hit. Sometimes it would be, when the sale happens, you increase sales, you increase cash, and you increase the cost of sale. And then you would also increase a consignment liability. And usually stores account for the consignment liability by giving the consign or cash or writing them a check. But that's not how this client handled it. And I am not seeing any other questions that were asked in the group. Um, I did want to discuss a little bit about how to deal with when an employee dies during the year, how to handle a deceased employee's wages. I'm going to share my screen with you guys so you can kind of see the process of doing some research on the IRS website. So what I had done is I did a search for deceased employee wages, IRS, and some of these information or some of this information it can be useful, but I always find it most beneficial to go to the IRS website first and then go back and well, that's again not the right thing. Um, to go straight to the IRS website and find out how to do it, and then you can go back and read a Thomson Reuters or HR related uh, information on how to do it. Um, and I'm using the search feature inside the IRS website and deceased employee. And it is not, for some reason, it's not coming up with the right stuff. Um, all right, so I'm going to start with this and actually, I think I know what I did wrong here on the IRS website. I need to put W-2 and then deceased employee. It didn't come up with anything. So I'm just going to search for the W-2 instructions. Okay. And I wanted the one that was the general information. No, I didn't want the one that was a PDF. Sometimes the IRS website is very frustrating to navigate. And okay, this is what I want, I think. Okay, there is a web page, and I was seriously on this yesterday and I accidentally closed it. But so we are going to go, there it is. I just clicked on okay, you guys, here's what I did. I clicked on print version, but right here, this takes you to the website, which is, it's, it is the instructions, the PDF of the instructions, but on a website, and it's a lot easier to read and find things. So I am searching deceased, and if we just click on deceased employee wages, it takes you right to the part where we want to take a look at. And if we just read the instructions, it can be really confusing. So I just want you guys to be aware of that. But what the IRS says is if an employee dies during the year, you must report the accrued wages, vacation pay, and other compensation paid after the date of death. Also report wages that were available to the employee while he or she was alive, regardless of whether they were actually in the possession of the employee, as well as any other regular wage payment, even if you may have to reissue the payment in the name of the estate or beneficiary. So, in plain English, what I interpret this to mean, and through research of, going and reading a website like the Thomson Reuters page, and there's a really good HR one. I'm forgetting the name of the organization, but they have some good information over there as well. But basically, when the employee dies, the you have to report the accrued wages, vacation pay, and other compensation paid after the date of death. What this doesn't say is that if the employee is paid via direct deposit has to stop. You can't issue a paper check until you get the legal documentation for the estate. And I asked around a little bit yesterday, and I was told sometimes this can take a year. They Somebody else said that it took them 11 months for them to get it for one of their employees because they didn't have a will. It went to probate, and probate court takes a while. It it can take forever depending on where you're at, and how contentious probate is. Because if there's a bunch of people that are fighting and saying, I am the true beneficiary of this estate, or sometimes in the event that the beneficiary of the estate is a minor, it can take a while, especially. That's why it's always important to have a will. Um, so, and then the whole part where it says, regardless of whether they were actually in the possession of the employee, I that part I'm not entirely sure what that means, but so right now la we've got the last pay period wages that was supposed to be paid direct deposit on Friday that we're holding, and we've got the unprocessed payroll, because they worked 2 days this week before they passed. So, um, there are unpaid wages, but, if we were able to get the estate and we're able to make the payment to the estate in the same year as the employee died, then we have to withhold Social Security and Medicare taxes on the payment and keep the payment on the employee's Form W-2 only as Social Security and Medicare wages to ensure proper Social Security and Medicare credit is received. And then on the employee's Form W-2, you show the payment as Social Security wages in box 3 and Medicare wages and in box 5, and Social Security and Medicare wages withheld in box 4 and 6. And the payment does not show up in box 1, which is federal income. It is taxable wages paid to the employee for federal. And you have to check on with your state if it appears in box 16 as taxable income to that employee's estate. And then if the payment is made after the year of death, it does not get reported on a W-2, and no Social Security and Medicare taxes are withheld. So when you make the payment, either, let me start that over. Whether the payment is made in the year of death or after the year of death, it also gets reported in box 3 of 1099 miscellaneous. And that 1099 miscellaneous is in the estate or beneficiary's name. And so you'll have to get their tax ID number. And so the required documents to make the last paycheck to the deceased employee is the legal paperwork showing the estate or beneficiary. And then we're going to need a W-9 for the estate or beneficiary, and because we have to use their taxpayer identification number. Most of the time, that's going to be a Social Security number if it's a beneficiary. If it's an estate, the estate has to get an FEIN, which would then be the TIN for the estate. Um, but and here's a big however on this one. If the payment is a reissuance of wages that were constructively received by the deceased individual while they were still alive, it does not get reported on a 1099 miscellaneous. It's just a reissuance of the check. So here's an example. And the example, to me, the example is a little confusing, but it does clear things up a little bit. So before employee A death on June 15th, 2022, employee A was employed by employer X and received $10,000 in wages, in which federal income tax of $1,500 was withheld. When employee A died, employer X allowed a 2,000 owed employee A $2,000 in wages and $1,000 in accrued vacation pay. The total of $3,000 less Social Security and Medicare taxes withheld was paid to A's estate on July 20th. Because X made the payment during the year of death, X must withhold Social Security and Medicare taxes on the entire $3,000 payment and complete the Form W-2 as follows. Um, box A and box A, E, and F are all going to be the employee's information, not the estate, but the employee. So this part is treated just like the employee was still alive. Box 1 is the $10,000 of the wages that were paid before death. Box 2 is the federal income taxes that were withheld from the $10,000 of wages that were paid before death. Box 3 and 5 are the wages paid before death and the wages and the vacation pay that were paid to the estate. And box 4 and 6 are going to be the correct percentage for the Social Security and Medicare taxes that were withheld of all $13,000 of wages. But the employer X must also complete Form 1099 miscellaneous as follows. Boxes for the recipient's name, address, and TIN. So that would be the estate or beneficiary's name. And in box 3, it's going to be $3,000. Even though amounts were withheld for Social Security and Medicare tax, the gross amount is reported here. So the part that people get confused on is, why do we have to do both a W-2 and a 1099 miscellaneous for these wages? And it's because they're not taxable wages to the deceased employee, which goes on the income tax return. The box 3 just is an informational return saying that the beneficiary or the estate received $3,000 that was not taxable on the W-2. I've had some people ask me questions. They're like, well, there's double taxation and different things. But if you think about it really long and let it just kind of simmer, it does make sense. I was really confused by this for the first couple of times I read these instructions, but it it does make sense. So let me know if you guys have any questions. Talk to you later. Bye.